The number of insurtechs and startups right now is significantly down. The amount of investment in the insurtech software is significantly down. And a lot of that is because of AI. We're doing it, but we're being cautious.
Welcome to AI Experience, the podcast that demystifies artificial intelligence. My name is Julien Redelsperger, and we are going to find out how AI is changing the world. And I'm super happy to welcome Lisa Smith. She's the CEO and founder of VICi, an insurtech company delivering pre-bundled solutions that process and post insurance transactions directly into core systems. So today we're going to talk about AI and insurance, how artificial intelligence is reshaping data quality, risk analysis, and the economics of the industry, and also why insurtech is moving fast but carefully. Thank you for joining me today. How are you, Lisa?
I'm fantastic. How are you?
I'm good, thank you. Thank you for joining me. So maybe, Lisa, we're gonna get started with the basics. Like, how would you define the word insurtech? Is it a combination between insurance and technology? Is that simple?
It was that simple. And we purposely chose that to align and yet separate ourselves from fintechs, the finance technology companies.
And so, what's the main difference between fintech and insurtech?
Insurtechs want to deal specifically with those technology pieces, specifically with the risk management, as opposed to fintechs have a lot of payments, a lot of lending, other concerns as well.
Okay, and so in the world of fintech and insurtech, of course, everyone talks about data. Data is the key. But in insurance, is the real problem actually too much data or too much bad data? Like, how would you qualify the data we need in order to run a proper insurance business?
It's such a great question because it's everything. So insurers have huge amounts of data based on the legacy of your claims, your predictions, and that's the models that we use to run your pricing.
Mhm.
But the rate of change of that data with climate changes and other disasters and some of the political environments, that old data isn't as valuable to us as maybe it used to be. We have all this new data from Google Analytics and different tools out there that are capturing all the new data. The problem is it's almost overwhelming. How do we get the old data and the new data to all work together to generate something that's anything close to accurate?
And so, because we have a lot of data, of course, it's a perfect field for artificial intelligence because it needs data. And I'm just curious, like you've been in the field for quite a long time. How did you see the practice evolving over time? And what has AI changed recently?
AI is changing the momentum of how fast things are going. So we were on legacy mainframe systems for 20, 30 years. And that was just to capture the data into a digital format of any sort. Then we'd been moving to systems like Guidewire or applied systems, depending on where you are in the industry. And it was structured data. It was trying to get the data structured so that we could read it better. Now we even have tools. We don't need the data as structured. We don't need the data sitting in mainframes. We've got all the data somewhere. It's how do we process it? And that's where AI is going to be a huge amount of fun because we're no longer the bottleneck or the limitation trying to process all that data.
What did it change in terms of risk analysis? Did it make it just like faster, or just more complex, or easier? Like, what was the main disruption here for AI data and risk?
Well, the trend has been to make it more complex, to make it more granular. We kept wanting to get down to just charging the people who are going to have the claims for the claims. And that's a problem because when we can get that good at our predictions, we're really more risk managing, not insuring.
Mhm.
Insurance, the number one rule, the first thing you learn is that we are the premiums of the many to pay for the losses of the few. And if I don't have the premiums of the many, if I don't have people participating in these insurance programs and these insurance pools, because I got the data so down to I know only you are going to have a roof claim this year, so nobody else is going to buy roof insurance, we've undone the intent of what we're trying to solve.
And when we talk about AI, I'm just curious because I believe we have three main players in the world of insurance. We have the insurers, we have the brokers, and we have the clients. Who benefits most from AI-driven models in that scenario?
I was thinking about this question and I struggled with it because I can tell you it's not, and it's not the brokers. If we know who to market to and we can do AI content driven marketing and direct to consumer marketing, the brokers are not going to benefit. except that they're the ones who hold everything together. They're the ones who tell the clients, hey, in your financial plan, here's the insurance products that you're going to need, whether that's home insurance or life insurance, whether that's car insurance or disability insurance. Um, so I think initially brokers actually have the most benefit in the short term because we're going to get them better information, better tooling, better information. They will be the ones to leverage the digital marketing and AI. They'll be the ones to leverage the digital um, fronts in marketing. But I also think in the long run, they're the ones that are going to be hurt the most. The insurers have the most to gain in the long run because accurate models and pricing models means that we'll price the insurance the way the consumers want and we'll give them the protection that they need.
And what I mean, you're well versed into the insurtech world. You're seeing startups emerging. What are they working on? Like, what are the next big thing in the world of insurtech?
A year or two ago, it was document management and process management with the idea that our workflows could be much more intelligent and much more predictive. They could actually read the documents and validate the documents and the content for us. And that was really critical 2 years ago to get our underwriters and our adjusters being more efficient. We had handed them all this extra data and said, here, make better decisions. But they had no way to process mentally or systematically that data. The the next part though, that's the big trend that's going to be coming up is fraud. It's going to be pricing out and finding the markets and matching the products and the markets better. And I think the part that we're skipping that we're going to have to come back to is product development. We're not building the products that consumers need fast enough right now. And I think it's hurting our reputation. I think it's hurting us with people not feeling that we're actually protecting them the right way.
What do you mean we are not building products? Like, what are we missing here? What dots do we not connect?
I love to use homeowners as an example because everybody lives somewhere, hopefully. Um, the base products, we're not getting to the consumers and convincing them that they need it, that they need to protect themselves for liability insurance and the core things that's there. So there's a lot of tenants living in apartments and condos that are uninsured. It's a huge market. And at the higher end, people who have the nicer homes, but not executive homes, like but nicer homes. The problem is we're selling them coverage still with a $500 deductible, and we're penalizing them if they try to go to 1,000 or $2,000 deductible because, well, why would you do that? Well, the answer is to save premiums. The answer is I can take on the low amount of the risk. What do I need my policy to do? I need my policy to protect me from large losses, not small losses. And yet the policies are still designed to protect me from a small loss. But if I have the credit score and the credit availability, that's not what I need it to do. I can come up with lots of examples of the way our products do this all the way across. And it's frustrating, the need of our customers has changed, but we're still selling you the same auto plan that we sold you 20 years ago.
So, as you may know, I'm originally from France, moved to Canada 12 years ago, and I had the chance to compare the price of insurance between those two countries. Why is insurance in Canada so crazy expensive? Could you help me understand that?
I could try. I could try. But the biggest thing is, again, home insurance, just as a starting point. But it's true whether I talk about auto, home, life, disability. We include so many options. And I was just doing a project in France actually last summer. And I was always saying, here, why, when I buy a pet, I buy my pet medical insurance, why can't I buy my pet liability right there? And it's a problem in California where you can't buy homeowners. That means I can't buy pet liability because what people don't understand is pet liability is tied into your homeowners. We don't sell it standalone. It's part there. There's credit protection built into your homeowner's insurance. There's um, if you're sued because of slander or libel, it's your home insurance that triggers. And that's what people don't understand. You're not just protecting your contents, you're protecting your income if you're sued. You're protecting your legal expense if you're sued. You're protecting your dog in case it gets bite somebody and you're sued. That's why home insurance is so expensive. Auto insurance, it's the same. All your medical coverages are built into your auto insurance, and people don't understand. It's not your health insurance that's covering it, it's your auto insurance. And it's true of life and disability too. We have built in so many options. I heard a speaker at a conference in New York City last year from a life company saying we have like 99 endorsements that are available for consumers. And do you know how many get used
No.
out of
Oh,
99?
okay.
It was four, four, four. So they're spending all this time building complex products, building complex options, and it's not what the consumer needs. They're cool, they're toys, but could we sell them as standalone or could we sell them as options? Could I now sell that? I can't sell that person fire insurance in California, but could I at least sell them dog liability, which is the number two claim right now, and for a long time was the number one claim. At least then I'm giving them the protection that they need for that. It's just an incredible opportunity for AI to really help us with this data that we've got, with the old data and the new data to match this
So
better.
you know both countries, US and Canada. Would you say the mindset, the prices, the products are more or less the same? I'm asking you the question because I do believe there is a connection between the population and the price you can pay for insurance. Like Canada, roughly 40 million inhabitants. US, roughly 400 million inhabitants. So I was spontaneously thinking that in the US, insurances might be cheaper because you have risk, but you have more people to, limit the risk, and everyone is paying, a premium for that. Uh,
So you should be right, but you're not. And the number is very weird, and it's a social mindset. So in parts of the US, they believe insurance is more like a warranty coverage. So they won't repair their roof. They'll wait for that hailstorm or they'll wait for that tornado windstorm to do enough damage that the insurance just covers it. So they actually expect the insurance to replace their roof every 8 to 10 years for them. They don't do the things that a Canadian would do to mitigate the claim. A lot of what Canada is seeing right now is the difference in flood insurance. Flood never used to be covered by our homeowners. It was only ever covered through a state of emergency by the government. And the insurers said, well, we can take this on. And the problem is when the insurers take this on, and we saw this in the US, then they have to handle the disaster. And there's a limitation in all our policies, Canada, US, France, that says we will put you back into the financial position you were prior to the loss, which means I have to rebuild your home exactly where it was in exactly the same shape. And in the US, like in areas like Houston and Florida and Louisiana and Alabama, we have rebuilt homes, the same home, 3 or 4 times because we can't move it and it's sitting in a floodplain or it's sitting in a hurricane zone. And we can't help those people sell that home and move to a safer area. They chose to live on the coast. The city chose to issue a permit that allowed them to build that home in that area where we're going to have basement flooding every 3 to 4 years and we're going to replace it every 3 to 4 years.
it's terrible. It's like there is nothing we can do. We just like it just occurs. Like your home will be destroyed every couple of years. You'll pay a premium, and it's gonna be destroyed and rebuilt.
So AI needs to not only tell insurers this, but we need to find ways of shifting the policy away from a homeowner to where the risk actually belongs,
Mhm.
which is at the municipality. If the municipality is going to issue permits to let those homes be there, then they're partly reliable, they're partly responsible, they're partly culpable in this. They need to have the community insurance, not the individual homeowners. And it's the way we distribute and share that risk that becomes the gap that we need right now. And again, we need AI and the data intelligence to make those cases. We need a voice that's going to stand up and actually argue with the regulators that we can't do products this way, that we can't insure this way. And you're seeing it. The Florida market is starting to loosen up a little bit right now with some insurers coming back in, but only for certain types of homes. But you're also seeing it in the resale homes. Some of those condos are not worth anything, and the homeowners can't sell them
Mm.
because they
Okay.
can't get insurance. The HOA prices, the rezoning, they're just, these people have suffered a loss that we can't insure
Okay.
anymore.
I'd like to come back to AI and more specifically to AI agents. Those like autonomous program that could make decision and action on your behalf. With the rise of AI agents that can plug directly into insurance systems, I'm curious about the value of the brokers? Because an AI agent could, ask the question, compare the offers, is available 24/7. What's the value of a brokers in the future? Do you think those jobs may be replaceable?
Those jobs were already at risk with the chatbots and the different agents as they were learning to be conversational. So that was already well in progress. But actually, I find the broker right now is the only one who's safe. Underwriting and adjusting because of the legal precedents and the data that we've got there, there's much more opportunity for automation and efficiency with those agents. They can be supervised, and there becomes a more senior role available to those underwriters and adjusters, but a lot more of their work can go there. The agent, there's a really neat gap in the insurance industry and the data that we have. I don't even want to guess at how many terabytes or massive amounts of data. But the one thing we don't have is some of that sales data because all the agent systems are still manually tracking their prospecting models. A lot of their estimates for how much the cost of acquisition is of a client, they miss that the agent has pre screened the data. Because I know something about you, whether that's visual or because of how we met or because of the something, I already may know that I'm going to offer you a certain product or a certain solution. And whatever happened in that agent's head to jump to that conclusion is in no system and no database where I can get to it.
We started this conversation talking about data, and I'm curious about where to draw a line. Let me explain. Like, if you want an insurer to make a good deal, you need to share some data: the size of your house, your address, the how much you make every year. I don't know, something like that. Uh, where do customers clearly say yes, I want to share my data, and where do they draw that line? I'm thinking driving behavior. I'm thinking like Apple Watch or health wearables or DNA data. What's the real red line for insurability?
All of those are really good examples. And actually, even your address will be. So in Canada, for example, there is no law that says a homeowner company has to offer you insurance. They have to offer you auto by law, but they do not have to offer you homeowners by law. So now, if you're in that floodplain that we talked about, they could start to deny you insurance. Now, they don't because right now we still have other protections and other things that we're working through, but there is no homeowners protection there. So, do you want to share that? Well, you have to with homeowners. But you're exactly right with wearables. I don't. And yet, the incentive in the intent is good. The advantage in Canada is our big insurers, actually, all of our life insurers, both do sickness and health and death, life. They're not separate. So we don't have this problem in the US that they have, like with some of these healthcare providers that don't care about getting you the best cause. They care about whether or not paying the claim is the right thing. And yet they have such a high denial rate on their health claims. We don't because we also insure your life. So if you're on a Sun Life benefit plan or you're on a Canada Life benefit plan, they are incentivized to pay your health claim because they do not want to pay your death claim. And there's a balance there to make sure that we are doing overall what's right for you. I am better off as an insurer having you continue to pay into the program and continue to participate your life premiums, your health premiums, even if I have to treat you for cancer. It makes sense. The US system, unfortunately, with that break, there's two different interests at play and they work at two different forces. So, should you be sharing that data? It's a personal choice. I think it's a lot less risky to do it in Canada than it is for those reasons. But then in Canada, the DNA one is we do not use that data at this point in time. And we have made an ethical decision amongst our insurers not to collect or use that data. And the example is our dearly beloved Newfies. They are a very unique genetic pool and there is a very unique genetic set of identifiers. If we identified certain risks, then we reduce that pool of insurance to just Newfoundland. And right now we don't do that. We do it nationally. So we keep the data at a national level because we only have 40 million people.
I just mentioned something about pricing earlier, and I'm curious why. I mean, AI, is streamlining processes. It makes things easier and simpler. Can AI lower insurance premiums, or is it just a marketing talk?
I don't think that'll be where we'll see the benefit first. I think the catch is the reason that our premiums are high is not because of the data and the decisioning. It's because of the cost of the fraud and the cost of the medical claims, especially in auto.
Mhm.
A lot of people don't understand that, but like one third of your auto premium in most provinces, except Quebec, is attributed to medical claims. It's paying for ambulances, healthcare, it's paying for physiotherapy, it's paying for other things that aren't auto related, but because the injury was auto related. So I think it's the fraud, and I think it's at the clinic level. I think it's going to be at the process level of how we settle and pay claims that actually has the best opportunity to be more efficient. And that's where we'll save you money. Right now, just to say I can price it better, I don't think they can. But that's my opinion. I'd love the underwriters to comment on our discussion and prove me wrong on this one. I think there's room for improvement, but I don't think that's where you're going to see the biggest savings.
I mentioned you're well versed into the startup world and you help people, launching their fintech, their startup, etc. When we talk about, risk and entrepreneurship, do you see a big difference between insurtech and fintech? My take is, I think the insurance company is a little bit like it is very cautious when compared to fintech or even retail or any other field. What's your opinion on that?
We are not in the insurtech boom right now. So the fact that Vicky and our team is trying to launch this new solution and trying to get some data and processes out there, we are a bit of an anomaly. The number of insurtechs and startups right now is significantly down. The amount of investment in the insurtech software is significantly down. And a lot of that is because of AI. And it's because of exactly your statement in your introduction. We're doing it, but we're being cautious. So 2 years ago, I was at a writers conference here in Toronto, and the conversation was, well, how are we going to use AI? And the main concerns were getting it up to do meeting notes so that we can be more efficient in our meetings, to get the underwriter synopsis, file synopsis, and get the data read and processed, and claims adjusters to get them a synopsis and a file and get them through the legal documents that they need to get through. None of that was about actually fixing our processes. None of it was about actually changing or developing new products. None of the conversation was about integrating the other third party data better, faster, beyond making an underwriter and adjuster more efficient. We're stuck in that loop. And I'm hoping next year we can get past that loop, that we're seeing those efficiencies, that we're seeing that gain. Um, and we can actually get down into the more interesting topics because while that is a necessary one, it's certainly not the interesting one. Doing the same thing better doesn't help.
So imagine 5 years from now, so 2030, 2031. What do you think insurers will be embarrassed of things they are doing and they used to do manually? Like my question is like the AI is changing everything. We know that it's going fast. In 5 years from now, what will be the big change for insurance companies?
It's gonna sound really silly to listeners on your podcast that are talking about really advanced AI and all kinds of really exciting things, but I think the thing that will be the most embarrassing is how much of our letters are manually overridden. We had even with the systems that we've got now, the underwriters, the adjusters don't trust those systems. They will not use the auto-generated templates. They will not use the auto communications. Um, we almost have to force it down their teeth with automation to get those communications out. They override and handwrite a vast amount of our communication still.
Hmm. Okay.
And there's no reason for that. None. There's no reason for that now, let alone 10 years from now.
What is the best advice you can share for people who want to work in the insurance business? Is it still a business that has a future with AI? And what would be your best tip, your best advice you can share?
I think we don't have a future without AI.
Hmm.
I think if we continue down the same products and the same paths, we're stuck and we're not going to meet what the consumers need, and the consumers will find value without us. And the banks will not offer insurance products and become our competitor, which has been our worst fear for the last 30 years. Instead, the banks will find ways through financial planners to develop products that just eliminate the need for us. Instead of spending $5,000 on your homeowner's premium, what if I put that money in towards a line of credit or a loan that made it available in case of an emergency? And I increased my emergency fund then I don't need the house insurance. It, it, there's, I think they'll go right around us, and yet we have a place, and we can do it cheaper, better, faster than everybody else. Um, Without AI telling us how we can help rebrand these products, relaunch these products, redo these products, I think we're going to really struggle in the future.
Okay. Well, thank you so much, Lisa. Or maybe one last question for you. Um, what do you like about your job?
I just love what insurance can actually do for people, and I think I showed you a little bit of that. The fact that I can talk about the life and health and the property and casual, the fact that I can talk about the investment services as well as this, I'm fascinated by all the different tools that we had that people should be taking advantage of. And I get frustrated that they're not, and I get frustrated that we're doing a lousy job showing people how good we can be for them. And that's what keeps me up in the morning. That's what I get excited about when I get somewhere where I get a company to get a new product on the market, where I get a company to try a new way of marketing to people, when I get a company to experiment with the technology and actually use it to see what we can really do instead opposed to being risk averse ourselves, managing the risk appropriately.
Perfect. Thank you so much, Lisa. So at the end of each episode, the guest answers a question posed by the previous guest. Are you ready?
Oh, I'm nervous. I'm nervous.
Well, after that, you'll have the opportunity to ask a question for the next guest. So here's your question,
All right.
courtesy of Jeff Riley, who is the former Massachusetts Commissioner for Elementary and Secondary Education. We can listen to his question right now.
When you think about raising your children with artificial intelligence, what questions do you have for them? But more than that, what questions do you have for yourself, and how have you gotten educated on what artificial intelligence is so that you can help your kid be prepared for the future economy?
That's an amazing question. So my daughter's 22 and just finished her university degree, and we were locked home in COVID with a teenager. And what we did was we actually would put the John Hopkins data set up on the board, and we would go critically through what the news was reporting versus what we were seeing. We actually did her math homework against that data set together, analyzing what do they mean if they say that this is the mean. So she could learn how the numbers were being manipulated, how to critically think about and investigate concepts. And we continue to do that now. We continue to sit here and discuss politics, and we don't just discuss one point. We research and we look up other points, and we actually say, well, and who's your source and what's your due diligence on that? And does that sound credible? Does that sound believable? And we get them to put some common sense on top of what you're seeing and what you're believing. And I think it's teaching kids that and learning that ourselves because we weren't taught that way.
Good. Thank you. So now your turn. What question would you like to pose for the next guest?
So coming from insurance and knowing that we are a slow adopter, I think the biggest thing for us is we're not thinking far enough ahead of what AI can do for us. What I would love to hear from someone else is what is the biggest leap that you think AI is actually going to take beyond what we're using it for today?
Perfect. Thank you. Lisa, it's been an absolute pleasure speaking with you today. Thank you for joining me.
Thank you, Julianne. It's been a pleasure too.
And that wraps up another episode of AI Experience. Thank you for tuning in, and we'll see you next time. Hey, thanks for listening. If you enjoyed the show, don't forget to subscribe on your podcast platform. Your support counts, and your comments can really help share this experience with others. You can also visit the website ai-experience.io to find out more. See you soon for a new episode.